recipes for technical trading success in Cook's Kitchen.
Hey everybody, Cooker back here. I took last week off. 2 weeks ago, I profiled the economic snapback and Euphoria 6 fundamental charts you have to see. The basic idea was I was trying to show you all this fundamental evidence that the stock market was way ahead of itself, meaning there was so much goodness already priced in, that we were at some valuation extremes. And so if you saw the video on YouTube, great. I highly recommend you go find the article version on Zacks.com, because I always do an article version. So April 28th, if you just search on Google, economic snapback and Euphoria, you should find this on Yahoo or here. And talked about macro goodness and gravity. Again, the theme was a lot of good stuff about the economy and earnings and the recovery and the reopening were getting well priced in at S&P 4,200 and NASDAQ 14,000. So I took a look at 6 macro views. Number one was the 21 snapback looks better than 2010. And that was a chart from Uri and Timmer, which you can find in the video. The video is on the same page. So if you just do a Google search, just search economic snapback and Euphoria on Google or whatever your search engine, you should find this on Zacks.com or Yahoo Finance. And you can watch the video with all the charts. But in the article version, I sort of flesh things out and explain what each chart means. So then I had a chart from Goldman about blowout GDP peaking in Q2. Hey, that's where we're at, folks. That was a great chart to look at. How Bank of America raised EPS growth targets, but not their target for the S&P 500. Meaning, let's see, what was it here? So they go to 185 EPS for this year and 205 for next year. But if they kept their S&P target at 3,800, which means they're keeping things under 20 times on a forward multiple. So again, this is what I talked about on April 28th. Another macro view from BofA, really good. They had this smorgasbord slide, just a buffet of economic data with PMI trends and historical tendencies. The long-term expansion is still in play. We're not going into a bear market, or we're not going into a recession, but we could definitely have another 10% correction, and that seems to be what's going on right now. Showed some other charts talking about the Fed stimulus and other stimulus, airline travel bounces. Okay, so let's go to the charts now and see what has happened since April 28th. So here we are. My NASDAQ chart is reloading. Okay, we're back. So here's April 28th. Right up in here, NASDAQ still, you had one more day to get cute with a brand new high in the NASDAQ 100 at 14,073.5 on April 29th. So you had one more day to be cute, decide if you wanted to sell something. And here we are. So 14,000. We're hitting new lows, here. Let's see. Have we been below 13,000 yet? This morning? Yeah, just barely. 12,990 on the NASDAQ 100, and it's probably going to get worse because all kinds of stuff is getting taken out to the woodshed. Every software valuation that was trading at 30 times sales, e-commerce, digital advertising, big data, you name it. It's all getting woodshedded here, and it will probably continue. So that, we went to significant cash back in late April, early May to capitalize on this. Where it stops, nobody knows. Now my projection was that we're not going to get another 10% correction, and we're not. Basically, I want to be a buyer between 12.8 and 13,000 on NASDAQ 100. But, you don't know, you just don't know who's selling and how much they're selling and where the valuation reset stops. So let's take a look at some charts of stuff getting taken to the woodshed. Shopify. I own it. Sold some. Probably should have sold more. But it seems to be hanging in. Look at the great thing about Shopify is you had this huge outside engulfing bullish reversal candle. I mean, all the good stuff you want in a candle trying to find a bottom. That was a pretty big deal yesterday. When you talk outside bullish engulfing reversal, this is it. Massively takes out the prior day's low, reverses hard, closes higher, and a pretty decent volume. So obviously there was a big buyer. Could have been, it was probably Bailey Gifford. Is my guess, is they were probably in there big. Maybe Kathy's Ark did some investing there too. But what do you have? You got a nice inside day set up now here, and looking like a doji on an inside day. I mean, some classic textbook stuff here. So let's see if Shopify holds. What else is struggling? Let's look at another one I own a piece of and recently added to, and that's the trade desk. We added a trade desk under 500 this week, and it's trying to hold its own too. So even while the NASDAQ 100 is getting painted red again today, you're seeing some buyers come in where they think there's value in some of these names. Let's look at something like Datadog, which a big data play, down from 120, trading 77 back to its basically where it was trading in the fall, before the big run up. Big double top there, 115, 120. Let's look at, who else do I want to see that's been a high flyer here? Let's see what Fastly's doing. Fastly is a CDN, content delivery network, where they help companies move bandwidth faster, especially at the edge. This thing has gotten beaten down, and I think you got a nibble here on Fastly down here under 45. I'm not saying it doesn't go to 35, but this might not be a bad place to start positions. Let's see what's happening in the chips. AMD, boy, like to be a buyer at 75. You got all the way back above 88 after earnings, but they sold it. So, the chip shortage, that's sort of in the rearview mirror, right? And so it doesn't mean you rush out and buy the chips now. Maybe a lot of that is priced in, looking at where the cycle is going to be 6 to 12 months from now. All right, let's take a look at Square and NVIDIA. See where they're at. Square, I still like it here. Probably be a buyer again soon. I'll wait for a flush. Maybe we get a flush below 200, and then I'll add some. It's just long-term. Square is going to be a $300 stock. It's just a matter of, how long it takes to get there. All right, one more chipper. We'll look at NVIDIA. NVIDIA, I added down here at 535 when I saw we weren't going to get another chance below 500. So at 535 we added. Enjoyed this run up to 640. Didn't sell any. And now we're back down here to 550. So, to me it's a long-term hold. Our average is really good right now. Our average is like 400. So we'll sit with it. It's nice to be able to add to things on the way up and not feel like when you're overloaded and you're adding on the way down. One more. Let's look at Baidu, because I had to get out of Baidu. We took our profits, and it's getting really attractive again. We were buyers at 120, and then again at like 180, 190. Before this big run up, I didn't sell everything up here, but we did sell some above 300. And then I let a last chunk go at 220. What are you going to do? We didn't lose money, but now Baidu is looking really attractive here. 185. I don't think it gets to 160, but I would save some firepower in case it does. All right, so that's your NASDAQ correction, your growth slapdown, smackdown in progress, like I warned you about 2 weeks ago. Hopefully you raised cash then, so you have a lot of choices now. All right, thanks for joining me in the kitchen, and we'll talk to you next week.